Well, good day, all. Ira Epstein, and here we are on another day where the market says, hey, Mr. Powell, you don't have it right. And it is right now Thursday, the 15th of June, 2023. Remember that we have Juneteenth coming up, so the marketplace is not open on Monday. Tomorrow, I believe, is triple witching, so it's going to be wild to begin with. And then you're going to have people talking about what has to be done at the end of the quarter, the month, as some rebalancing needs to be done in these markets. And you'll hear all kinds of talk about it one way or the other. But what happens is rising tide lifts all ships. And that tide is still these 7 to 10 stocks that are on a tear to the upside. And as they go, they take everything with it. One of the benefactors, of course, been Ford. It jumped on the Tesla bandwagon, and away you went with it. But it's other markets, you know. You're seeing it across the board. There's just good action here as the market has come up. Tesla itself today, not up. As strange as it might be. NVIDIA, of course, up, but not making new highs either. As I said, it's the rising tide. Everything comes up with it. Now, as usual, the market comes out today all over TV, the analyst, that's it, the Fed is done. I knew that would be the case. You know and I know that the Fed chair said this is a pause. The July meeting is live. The members expect that there's 2 more, that's the consensus, 2 more rate hikes this year. And the marketplace said, sure. And away they went, as they've been doing. I call them the naysayers, and they've won the day. There's no question about it. And they come in and they gobble everything up and go, you don't know what you're talking about. Really, that's what they say. You don't know what you're talking about. And if you look at the analysts on TV, that's pretty much what they say, is the market has gone their way. I remember the days when it used to be, you don't fight the Fed. Well, right now, you don't follow the Fed. That's been for this, for out of the past 14 months, at least 7 of them. At least 7 of them, after the initial shock of the markets coming away from zero, the naysayers came into power, if you look back at it, and that's what's been going on. Okay. Where it ends, I don't know. Do you jump into the mania? That's up to you. If you don't own those 10 stocks and you look at your stock portfolio, it's gone up, but not dramatically, right? If you strip out those 10 stocks, it's amazing where the rest of the market is. But if you own any of those 10, you're in very good shape. When you and I look at Ford, it's nicely come up. I mean, this is a market that's gained in no time at all. Since the end of May, beginning of June, when the market was under 12, you're up to 24. So you got, what, a 15% gain already in the market? And just for the day today, it added 1.76. Is it standing on a stilt? You better believe it is. This is the last break low. The market's got the pattern of higher lows, higher highs. The trend is clearly up. You've had crossovers that I prepared you for. I did it all week. I started telling you, I said, and it started right here. I said, watch this. I said, if this gets over, generally when you get a crossover, you make a market go for the most recent high that it's made. And I said, we're watching, and I'm going, if we get another crossover, you can get another spook move. That's just what happened. There's no more crossovers left. Where's the Bollinger Band on the chart? You're staying underneath it, not over it. So the market is in a nice run here, but is it sustainable? I doubt it. Am I bearish? I am not. Okay. I do think there's a pullback, and when it comes, I'll look at the chart pattern fresh. If you can't, and you're not, if you didn't catch and you can't catch a move like this, whatever the reason, don't chase it. Because if you get stuck here, now you're defending yourself. And if it were to fall back, for example, $12, $13, that's where you want to buy it. And now you're stuck, you own it a lot higher. Just giving you the points that I've learned. Do we have an embedded reading? Absolutely. 2 things. That means that breaks in the market, good ones, until you get the red line under 79 will be bought. Number 2, when you close the red line under 79, the odds favor strongly that price and the 18-day average will attempt to run at each other. Schwab today, interesting how the market because this is the market. Schwab, remember, they came out just this week and they said their earnings are going to be down. The forward guidance, 10, 11%. Okay. And I would have thought that higher rates would hurt the company because they'll have to pay up more to keep depositors with them, to keep the cash accounts. Remember, they earn as a brokerage company a lot of money on idle cash, a tremendous amount. They pay you out this and they make that. That's the profit model. Did you see Interactive Broker run all the ads all day long on financial TV? We'll pay you 4.85%. Here's what the others are paying. Well, there's a reason for that. That's one of the profit centers. So in order to keep it, if they have to pay a higher rate, it hurts the profitability. We're not hearing too much about the banking crisis right now, so they're not in that yet. And so far, the market didn't make yields go crazy on the market. The 210 did move out. It's in the 92 range again. If it gets back over 100, it's a problem for the banks. And you got to consider Schwab vulnerable to what happens in the banks because of the large cash deposits its clients keep. Gasoline, this is the July rally, July 4th. I prepped you for it. We talked about it. I said, I think you're there. I don't expect you're getting back under that low before you get up and make that high today. I feel pretty good on that one. Now, in the financials, I'm surprised they're up. I'm going to look for them to give us a failure here. By the way, I'm not bearish. You have an embedded reading, so don't get me wrong. But mentally, I think this is where they should have some problems. And that's if interest rates are really going to go up. If they're not, the market is saying, Ira, they're not. Let's take the name off the chart. You've watched me, I hope, a very long time. You have an embedded reading and you've got an uptrend. Am I ever looking for the bear side? So I'm not. I'm just saying this is where they should have a lot of problem. The 200-day average, the upper Bollinger Band, the 100, this is the problem zone for the market. In the industrial sector, I was impressed. We're starting to see different cities, the regional districts coming out, if you will, from the Fed, and it's better. I'm not saying it's on fire, but industry's a bit better. It's not falling apart, and you're seeing that right here. Again, a fully embedded reading. Bullish. Market's not letting the average person in. Why? Each day it's making a higher high. You're not getting the opportunity to buy. What else happened on the chart? If you take a look carefully here, yesterday, you had the 18-day average under the 100. You had your bullish crossover today. Here's the crossover, and this was the 14th. Now, when you get it, you normally go up and go for the highest high. That's what's going on. So there's a lot working. NVIDIA had gotten through that high. Now, we're doing an analysis because NVIDIA and stocks are so important. They gave me a trading idea. I looked at the gap in the chart, and I looked where the moving average was, and when you had this happen, there's a percentage number that if it's too far away, you're never going to hit getting to that 18-day average. That's all I'm saying. So it gave us some ideas. Are we going to embed again? If you do, you're on another run to the upside. Both numbers are over 80 today. Both were over 80 yesterday, not so the day before. I think tomorrow's a real important day. If they embed, well, that tells me the pros are still going to buy this market. I'll get rid of this old gray line. It's not a moving average or anything, but I just wanted to make a point. I did the same with stocks, and you are embedded. So the pros are going to buy these markets on breaks until that red line closes under 79. Then I'm fearful we're going to get a whoosh to the downside as you pull the mania buyers out and people realize I bought a bit too high. Now, not everybody did. Some will ride it out for whatever the long-term cycle is. You know that. In the home builders, I mean, the homes are in shortages. Lennar's doing a phenomenal job, but look at the price point. They're under $500,000. Those are the people that can afford to get a home. Over that number, you got a problem. Number one, you got to be careful with the FHA number, right? You want to see where the mortgage rates are going to come in. Then you go to the bank for those jumbos. You're starting to pay up a lot more. If it's personal money loans to do things, you got another big problem. But this is the sweet spot, and they're doing it. The good news is they're not having to give too many incentives. They're getting the people lining up, and their book, if you watch the CEO of it, pretty thick, impressive. So now we come to the energy sector. And are the Saudis going to be right or wrong? I don't want to bet against them. They can cut more. It's that simple. We'll see what's going to be done. You're in no man's land. You have a higher high, lower low. You've got bullish bias because you're over the 18-day average, but you got a lot of resistance over you. Now, the bear side comes into play on this chart. If you get back under the lows of Wednesday, close under 79.83, then I'm actually near-term bearish looking for 76.99. Not a big play, but that would be one of them I look at. Gold rejected the downside today. You came down again and you found your support at the green line, the 100-day average. To get the market out of the bear trend, you got to get over 2 days ago's high here, the 182.43 level. I didn't say that's bullish. That would take you out of this little bit of a downtrend. What do you have? You have a sideways action market topped and bottomed by narrow Bollinger Band. It likes to spin in there a bit. That's what I think is going to happen. When we come to the silver market, it's the same thing. You're suddenly going sideways in the market. Correction, but stronger than gold. You're staying over the 18-day average, and all you did is correct to it. But it's not in a buy mode. The copper market is waiting on China. It's really that simple. China's lowered a series of interest rates, almost one a day for the past 3 days, somewhere in there by the People's Bank of China, somewhere in the repos, somewhere in the deposit rates, all kinds. There's more coming. The problem China's having is they're not getting foreign orders for goods. The world has slowed down and the factories aren't humming. That's the problem. So they're turning inward to make things happen, and that's really hard. The people have just gone through COVID. They don't want to let go of their money. They want to hold on. They don't trust anything. So the government's got to find a way to get them to do it. You can either lower taxes or give a lot of stimulus in some way, property, whatever it is, but they have their hands full. It's so much easier if the foreign orders were coming in, and they're not. You see that in their import-exports and what's going on. BND, just sideways, going nowhere yet. And this is what I said. I think that we're at a point in certain parts of the market, especially the TLT, where the market is starting to say to you, we're not necessarily going to add a lot more yield here. If people don't believe the Fed is right, and even if the Fed goes another 50 basis points, there's very few people, including me, that thinks the market's going to go much beyond that, if to that number. And I am the hawk. And I just don't see it right now. But this is going to be one of those factors with all these that came in. It typically takes anywhere from a year to 18 months for the full, I want to use the word, the full effect of the hikes to hit the whole marketplace. That's where I think we're at. So be careful. We're already about 14 months in. So somewhere over the next 16 weeks is where I'm looking for the market to see the bigger slowdown hit the U.S. economy. Maybe I'll be wrong. I don't think I will be. Dollar, I'm bearish long term. I want you thinking the short side up here. Now, momentum's down, trend down. I don't recommend selling under a Bollinger Band, but good rallies, I think, should be hitting the market. FXE, the opposite. You want to be long, but you don't buy over Bollinger Bands. I'll be looking real hard at the 18-day average, and it's too overbought. And you put it together, and you come up with a game plan. And every morning, I try to give you that plan. If you look on the blue, if you're watching me on YouTube, just click that button. That's how you get into the morning videos. I record one of the videos at about 5:15 in the morning. I record the other at 9. Recording time takes about 30 minutes to record and render, and then they're out afterwards. I cover daily and weekly charts, ideas for the daily and long term. I'm getting even further into the long-term charts. Now we're starting to track the long-term recommendations in these videos for you. I'm not publishing an ever-going track record. If I said buy this until that trade's closed out, that's it. Not cumulative, ahead or behind. I don't want to be a trading advisor. I don't want to do all those filings. I'm not going to. But if I say here and you're paying for that analysis, I should follow that trade through, and that's where it ends, and that's what I'm doing. So got to be careful with what I do, and I go right to the edge where it's legal, and that's it. If the government said don't do that, I wouldn't do that. I cover all the futures, the ETFs, daily, weekly, trade ideas, stops, where to go with it. And there's times I'll tell you get very aggressive and times to pull back. And that's what you learn to do. You got to do both. So how do you get all this? Well, you can click up here. You'll see an icon at the top. Give it a click. It'll take you there. You can go to the website. It's under the word research. You can even call my staff. They'll get you hooked up. I'm Ira. Have a great Father's Day. Have a great Juneteenth. I will catch you all come again Tuesday. Take care.